So it's been a bifurcated market, really great year for gold and stocks, not so much bonds and oil. But my next guest, he actually has thoughts on all of the asset classes. Let's bring in Kobeissi Letter, Editor-in-Chief Adam Kobeissi. And Adam, just taking a look at your summary of analysis, you're bullish on the S&P, bullish on treasuries, bullish on West Texas Intermediate, bullish on gold and gold miners. It's rare I've seen you, bullish on all of them. I want to take them one at a time. So the S&P, I mean, it's hard not to be bullish. Just looking at this, it just kind of goes up, stays above the key moving averages. But do you get worried? I mean, will it get frothy at any point?
Yeah, I mean, look, I think it's been the same narrative all year. We go straight up, then it becomes technically overbought. Then instead of a big pullback, we just kind of trade in a range. And we've been in this range now in the 6,000 to 6,100 range.
Right.
I think next we're setting up for 6,150 to 6,200 plus, and right now, I've been saying it all year. I feel like a broken record.
So again,
don't fight it.
It gets a little consolidation for a moment,
yep.
Then takes off again. A little consolidation for a moment.
And for 2024, that's a big pullback you circled. And any other year, it's just another day. So the market is really just incredibly strong right now.
I'm curious on bonds, right? So now do you like bonds here? Because these yields keep going up.
So this was more of a short-term play. I think that we get a buy the news reaction actually after the Fed cut this week. We're calling for a 25 basis point cut, primarily because things have shifted so far in the hawkish direction over the last few weeks after the recent inflation and labor market data. I think we get a little pop in TLT after the Fed decision, but not necessarily a huge breakout rally.
If these yields though get, let's say, above 4.5, though, I mean, could that, to me, like, would you?
That's been the near-term top. I think if we get above 4.5 and we start going towards 5, then yeah, at that point, everything, all risky assets are going to start taking a little breather.
Oh, really? So that's a red flag for everything.
I think so.
All right, let's
especially
talk about
towards
oil
5
for a moment. Listen, it finds support down here around 67, but it can't break out. I mean, a lot of folks like oil. I had subscribers who were pounding me. How come we're not more oil stocks? But this is
this has been the best range. The 67 to 75 range. Right. I've just been trading it. When we get to the bottom of the range,
this range here.
Yep.
Yeah.
OPEC steps in right when we get to the bottom. They cut back production. They extend their production cuts, and then optimism comes back about the economy. You go to the high 70s or mid 70s, then all of a sudden the China demand worries come back. So this range has been very tradable. We bought at 67, calling for 74, and I think we get there.
Yeah, it's hard to argue, but golly, and then, again, we're getting above the 50-day, which is usually a good sign.
Yep.
And gold. It's, again, very similar chart. It's hard to argue why you have to be in gold, right?
Right, and look at, I want to explain how strong gold has been. Even with the recent drop of $50 to $100 from the high, the U.S. dollar index is up 5-6% over the last couple of months. Gold is basically flat. That's an incredibly strong gold market. Any other year, gold would have been down 10% over that same time period. I think we see $3,000 next year in gold.
Now, for the biggie, NVIDIA, buying calls. Okay, folks, set it up. Rate of change is moving a little bit lower here. On the bottom, we have relative strength. That's kind of drifting in the wrong direction. And we just broke under the 50-day moving average. Adam, where are we buying these calls?
So look, I think what we've seen in NVIDIA right now is this big rotation back into Tesla, Broadcom, these other names. NVIDIA's taking a breather. It's missed out on the recent rally. I think right around 130, we're starting to find the bottom in the 120 to 130 range, maybe 125. From there, I really think we'll go back to 150 plus, and people will be surprised how quickly this name can run. At the end of the day, all chips companies are fighting over 10% of the AI chip market. NVIDIA controls the other 90.
So it's not a buy at this very moment.
I think we're getting there. I think we're close. It might be a good spot to start nibbling a little bit, but I think ultimately, regardless if it's 130 or 120, the dip is going to be bought.
Where would you use a stop? I mean, do you have a sort of a stop loss here?
Yeah, I mean, we see it's been a huge range. Like
it's been a crazy range.
It's almost like the $90 to $100 area is like the line in the sand, but it's so far below where we are now. I mean, this is the kind of name where if you're playing it, you got to be able to weather the storm.
On the options, how far out would you go?
Usually I go about 6 weeks, especially with a name like NVIDIA where the premiums are extremely high. That's something that for our members, I try to kind of outline.
Right.
You don't want to go too far, but you also don't want to go too close because then you're playing with the premiums in both directions. I think 4 to 6 weeks is always a perfect sweet spot for that.
Anything sort of out there in the radar, not bothering you, keeping you up at night, but did you got your eye on?
I'm watching inflation. I think I went on this show months ago saying that we're seeing stagflation. I actually think we're now seeing stagflation for the first time. And when Powell said he's not seeing the stag or the inflation, I'm now seeing the stag and the inflation, and I think that's going to be the theme in 2025.
I bet you someone asked him about that too on Wednesday. When they do, I'm going to think about you.
Thank you, Charles.
Looking good, my man. Great stuff.